I'm here today with Craig Barber from Fairway Mortgage. Craig's one of the top mortgage lenders in the state, and I'm going to go over a couple things that buyers and sellers and everybody right now has a few misconceptions and different strategies we can deal with the changing market. So Craig, thanks for joining us.
Thank you, Charlie.
One misconception is that the Fed controls mortgage rates. We know this isn't true. Can you kind of elaborate on that?
Yeah, absolutely, and especially over the last couple of weeks when the Fed recently increased the overnight lending rate or the Fed fund rate by 3/4 percentage point. Of course, the next day the media said mortgage rates increased 3/4 percentage point. Not true. The Fed does not and cannot control mortgage rates. They could try to manipulate them with a short-term lending rate, right? But mortgage rates trade on the secondary market similar to how stocks and bonds trade every single day. So the Fed doesn't control it, but they can manipulate it, and they're trying to curb inflation, and that's ultimately what determines how mortgage rates go up and down.
Okay, no, that's a great explanation. Definitely clarifying it for a lot of buyers. So another thing is the 30-year fixed mortgage has always been traditionally the most popular way to go. Can you explain what an ARM, an adjustable rate mortgage, is, and how it's not as scary as it might sound to some people?
Yeah, absolutely. So ARM, adjustable rate mortgage, typically are much lower than your typical 30-year fix, right? So an ARM, what it stands for, adjustable rate mortgage, comes out usually fixed for either a certain period of time, whether it's 5 years, 7 years, or 10 years. So you're going to have that fixed period, but then after that has the ability to adjust up or down, really depending on where the market is and how everything's moving.
Yeah, sounds good. Yeah, like I said, it's just in the market we're in now, we have to come up with different strategies. We have to figure out different ways to get creative for buyers to make deals happen. Sales prices are still high and rates are higher, so people's buying power has definitely gone down. Another strategy that you mentioned to me is the buy-down strategy. Can you explain that a bit more?
Yeah, the buy-down strategy is something we've been around for a long, long time, but it's starting to get popular again, especially as the markets become a little bit more balanced, right? As you said, prices are still high, rates are higher. I mean, we're seeing levels that I've never seen in 19 years in the business. So the buy-down, what you're doing is you're buying your rate down, and there's two ways to buy your rate down. Permanently, which we all heard of before, with discount points, right? You're buying that interest rate down.
Yep.
Or something called temporary buy-down, where you're temporarily buying your rate down 2% for the year one, 1% year two, and then ultimately from year 3 on, you're getting today's mortgage rate. Great strategy for someone who is nervous about payments today,
Yep.
but understand that they're getting their house that they want today, and the market is still very competitive in a rising rate environment.
Great. No, I mean that. Again, any strategy we can use right now to try to give people different options is key. With the buy-down strategy, I know it might not work with somebody who's got a low down payment, as you were saying.
There's a couple different ways of doing it. You could have seller-paid buy-down, which is great, especially as the values continues being higher and the market's a little bit more balanced. But we could also do a buyer buy-down option or buy-down strategy.
Yeah.
Again, it just depends on how much down they're putting. I mean, sometimes it may make sense if you're putting 10, 15, 20% down to put this money into upfront interest first.
Yeah.
Rather than permanently buying it down, temporarily buying down, again, to get a payment they're more comfortable with.
Okay. And another thing that you and I have talked about, and we've been in the industry now, I've been in 10 plus years, you've been in it, 19 years?
Almost 20, yeah, crazy to think, yeah.
So I think one thing that we used to see more was sometimes the buyer would roll their closing costs into a loan if cash was an issue.
Absolutely. Seller credits. We're starting to see that a lot more. We're starting to see the offers going in a lot more seller credits, right? And whether you're in a rising rate environment or even a decreasing rate environment, financing those costs over the life of your loan tends to make financial sense for most people.
All right, great. Yeah, so hopefully this was helpful for everyone. A few different options right now. Again, we're in a very volatile, changing market. So anytime we can get new strategies to try to make monthly payments work, it's great. I think, in my opinion, buyers should focus on the monthly payment, not worry about the rate as much. Again, you went over these different options. So again, if you have any questions, Craig and his team do a wonderful job. Feel free to reach out. Their info will be in our post.
Thanks.